The Department of Petroleum and Mineral Resources has confirmed that fuel prices will rise on December 4, 2024 due to higher global diesel prices and a weaker rand. Moreover, petrol prices will increase by 17 cents per litre, with 95 unleaded now costing 20 rand and 68 cents at the coast and 21 rand and 47 cents inland. Diesel prices will rise by approximately 55 cents per litre. Economist Koketso Manu offers insights on the economic implications of these changes.
Fuel prices will be hiked again in December. On the 4th of December, petrol prices will increase by 17 cents per litre, diesel prices by over 50 cents. So that would bring your inland 95 unleaded petrol price to nearly 21 rand 50 cents. But wholesale diesel prices will remain under 20 rands per litre. So what really contributed to this increase was a weaker rand, higher international diesel product prices, as well as higher supplier margins. So starting off with oil prices, we saw Brent crude oil prices remaining relatively range bound in November. But, since March of this year, we have continued to see a softening trend in oil prices. So oil prices are still relatively supportive than what they were earlier this year. So as expected, the demand supply fundamentals are what has really contained oil prices. And this has been further supported by the recent easing in the Middle East tensions. So going into 2025, what's really going to drive prices is whether Chinese policy stimulus supports economic activity as anticipated, and that, filters through to commodity demand as well. However, we are also concerned that hostile trade tensions, which could be further exacerbated by Trump's protectionist policies, will weigh on overall global growth. Even as, the US, for example, may show resilient growth in the near term. So the prospect of stronger near-term growth and higher inflation in the US will have implications for the Fed's cutting cycle, and which will be supportive of the dollar. So when we think about the rand-dollar exchange rate, we think that there should be, continued volatility in the near term. This could be mitigated by higher industrial and precious commodity prices that would be supportive of South Africa's terms of trade. But the rand really remains above our estimate of fair value, but hopefully will improve as the global outlook becomes less uncertain and risk sentiment improves going into the latter part of next year. For now, the rand rather than oil prices is what really poses risks to transport costs. That said, we are in a better place now than what we were